Hello, boys and girls, ladies and gentlemen. Welcome to the latest webinar from A.R.D. Consultancy with me, Andrew Dawkins, and
me, Rachel Blackhall.
It's lovely to have you with us, and thank you very much for tuning in again. And what are we going to be covering today, Rachel?
So today we will cover a quick update on what's happening at A.R.D. Consultancy. I'll then pass over to Andrew to give you an update on the markets and how they've been performing over the last little while. We'll then be joined by a local business owner, Dean Serafini of Sony Centre in Falkirk, to give an update on how coronavirus has affected his business, and then move on to question and answers. So as always, if there's any questions along the way, just type them in and we'll hopefully try and pick them up at the end.
That's great, lovely. And we have to apologise. We may hear a bit of banging in the background. We're getting some work done to put in the PPE equipment and also makeup studio for me. And so if there is some noise, bear with us. It's not your system, it's us. So, Rachel, what's happening within the business?
Well, it feels like it's not too long ago since we last gave you all an update, and there's not really been any dramatic difference to how we're getting on here in the office. But there has been a change in lockdown. It's starting to ease, so we're looking at some measures that we'll need to take to keep everybody safe. So I'm sure there's going to be a few changes when the time comes that we can fully reopen the office, but we'll be sure to advise you of them all and what the procedures will be when the time comes.
Great.
And I just want to touch on Zoom again. I know I've mentioned this before, but I just thought once again, we've had a few questions from clients about it over the last few weeks, but we're big fans. We really think it's great. It's really helped us carry on providing the same sort of level of service as we would if we could see people. So we've had a few questions, and I just thought I'll clarify the process. We'll simply send you an email. There'll be a link there to join the meeting, and all you need is access to the internet, a camera, and a speaker. So most laptops, tablets, and phones will all have these.
Any particular brand you would recommend, Rachel?
Well, it's got to be Sony, hasn't it? Well, in the office, we've gradually been turning one of our meeting rooms here into what feels like a studio. So we have a new branded backdrop, which actually washed Andrew out. So we had to order some more lamps.
A makeup studio.
That's what's getting built now. We really would encourage anybody who might be a little bit anxious about it, please give it a go, because we've had lots of feedback for those new users who really thought it was great. So please give it a go. And over to you, Andrew.
Okay, so the market commentary, and we looked at the last 1 month since we had our last webinar. Thought we'd perhaps give you an idea as to who's doing well at the moment. So the big winners over the last 4 to 5 weeks have been the UK smaller companies sector. Now, you'll probably remember this was the sector that went into the biggest free fall when we had the market slump in February and March. Generally, the reason for this is because smaller companies, because of the volatility within the market, a lot of investors will perhaps move out of that sector, seeking security within bigger companies, or perhaps will move money into cash or other assets. So as a barometer, generally, the UK smaller sector will fall first, and then as things start to improve, will then come round and come out of the downturn sooner than the rest of the market. And that's what's happening at the moment. So the UK smaller companies sector has been one of the big winners over the last 4 or 5 weeks. We've seen some good movement as well in mainland Europe. So that's given very, very good returns, basically back on the German economy, which has picked up significantly. There's actually today in the news, one of our long-term holdings was a company called Wirecard, a German company, and this is actually today filed for bankruptcy. And it's the first time a DAX-listed company, similar to the FTSE 100 index here, has actually filed for insolvency. So it's a bit of grim news, I think, because it's filled a lot of the regulators over there. Apparently, it's missing 2 billion euros. So quite a big amount to be missing that. And this was actually the holding has been gradually reduced over the last 6-7 months. So we don't have too much exposure to that, but still not a very good story for anybody. Corporate debt has been a winner as companies have started to restructure their debt levels and bring new debt to the market. So that's been quite good for us. We touched on corporate debt last time, didn't we?
We did indeed, yes. Explained how that works.
Yeah, so I think EasyJet, the last company in the UK to sort of issue shares, try and build in funds to try and keep them going over the next wee while. And finally, the Far East. So the Far East really has probably been the least affected area economically in terms of performance, because of the fact that the coronavirus there hasn't had such a devastating effect as it's had in the rest of the world. So Far East continues to do really, really well. So we're pleased with that. Now, if we have a look at our portfolios, and we realise that not everyone listening to this will be invested within the portfolios, but it gives us a good guide, I think, to what's happening with the investment world generally. So the first slide here is our defensive portfolio, and this portfolio has the least amount of shares within it. And we can see here what we've done is compared the charts we had at the first webinar we ran at the end of April.
Yeah, just start of May. So we prepared these figures just at the end of April.
And what do they, just in case people can't read this particularly well, including me.
So the yellow line there is the figures that were quoted on our first webinar at the start of April, start of May, taken from the 28th of April, and the orange bar there shows over the same time periods on the 25th of June. You can see the difference there. What one we're going to look at in particular, Andrew?
What should we look at? Well, we'll look at perhaps the last 1 month. So the portfolios for 1 month, the end of April, we were showing a return for that portfolio.
It's 4.1.
And then at the moment, we're showing a return over the last month of
1.73.
Excellent. Well done.
Should have brought your glasses in, Andrew.
Yeah. Yes, thank you very much. Longer term, 3 years, we're showing now performance of
7.8 in April, and as of yesterday, it was 9.98.
And the 10-year figure
was 63.51 at the end of April, and as of yesterday, 70.5%.
So in other words, if somebody had been invested exactly 10 years with us to the day, they would have seen a return before charges of 70%. And if they visited the office at the end of April, they would have seen a return of 63%.
It just shows the difference.
It does indeed. Very, very good return. The next slide then is for our cautious portfolio. So for this, we increased the equity component to around about 30 to 36%, depending on the time of day. And once again, the numbers for this one, Rachel, if we just go over the year figure.
So we're looking at, as of April, it was down 1.52%. But as of yesterday, it would have been positive 0.74%. So there's not much in that really for the year.
The 5-year figure?
In the 5-year, you'd have made 24.7%. And as of yesterday, it would have been 32.72%.
And then finally, if somebody had been invested exactly 10 years ago.
10 years, 79.19% in April. And yesterday it was 88.38%.
So again, things going in the right direction. And then the balanced portfolio, which is middle of the road. So we have here approximately around about 60% in equities. And then we have some cash holdings, some money in commercial property, and money lent to governments here in the UK and overseas. So the year figure for that one, Rachel?
The yellow bar would have been down negative 3.15%, and as of yesterday, 0.16%, so almost neutral.
Good. And for the 5-year figures?
The 5-year, the yellow bar is 32.81%, and the orange bar is 42.46%.
And for those clients that have been invested exactly a year? That's a year?
10 years? 10 years is 112.77 against 127.7.
So double the money. And okay, our capital growth portfolio, we really should come up with some new names for these, shouldn't we? Anyway, for the capital growth portfolio, which increases the equity component further, we have then for the 1-year figure.
The 1 year is, the yellow bar is down 4.43%. And the orange bar, you can't quite see it there, but it is down 0.53%.
You're right, I can't quite see it.
The 5-year performance, you can see a bit clearer, is 36.07% against 49.65%. And over the 10-year period, it is 135.65 against 156.04.
And finally,
it's getting there.
portfolio with the most equity component, around about 92% equity holding at the moment. So for the 1 year figure,
similar figures again. It's down 4.78 against down 0.56. And the 5-year figures, we would have made 43.65% and 56.3%. Over 10 years, the yellow bar is 169.16, and then the orange bar is massive 201.47.
So in other words, if you've been invested exactly 10 years within the aggressive portfolio, you'd have trebled your investment. This really sort of shows us the basics of investing with us, in that we take the longer term view, because once again, our clients really are looking for making money over their lifetime, the vast majority, rather than saying, well, look, I need a particular sum of money in 2 years' time, 5 years' time, 10 years' time, or whatever. If we do our job and we make decent returns, we're going to find that clients will remain with us and will keep a proportion of their assets within the portfolios, because long term, there really isn't much, if anything, that compares to the returns that we're seeing here. The risk is for the shorter term investor, so anybody investing for less than, say, 3 years, then you have the potential of losing money if you cash in during that period. But taking the longer term view allows us to be a lot more relaxed about holdings, still avoiding those asset classes that we've avoided in the past, such as the cyclicals, and included within that sector now, we're including the banks. So we have very little bank exposure. We don't have any airline exposure, any holiday operators within that portfolio. It really keeps the cyclicals under small allocation there. And it's making money over the medium to long term, which is what we do best. So short term, yes, there will still be that volatility. The markets are still spooked by the re-emergence in certain countries of the virus and the implications that causes. So some big stores in America are now closed. Well, they were open for a few weeks, but we've seen the virus spreading, and that's happening throughout the world. So we're very cautious in terms of what's going to happen over the next year, say. And we've got Brexit as well towards the end of the year, which again will create that volatility. But longer term, it's the volatility that we keep saying that drives profits for tomorrow. So volatility for us, for the investor, is very, very good, because this is where the profits are generated for future. So as it is at the moment, it's volatile. It will remain volatile. So short term, we couldn't guarantee whether a year's time we'll be making profit or not, but we can virtually guarantee that in 3 years, 5 years, and 10 years' time, we'll be making significant profits, as we've done over all periods since we've been in business.
Mm-hmm.
Did I cover everything there, Rachel?
I think so, yeah, a bit of a whistle-stop tour. We've obviously covered these in some detail the last couple of webinars, so I suppose it's just what's changed since then. So thanks for that.
You're very welcome.
And now we are joined by Dean Serafini. So thank you for taking part, Dean. For those of you who don't know, Dean owns the Sony Centre in Falkirk. Can you tell us a little bit about your business for those that may not know?
Yeah, thanks for having me. The store opened in 2002. For those who don't know where it is, we're just outside the retail park, just off Graham's Road. And it's been there since 2002. And originally, the business was owned by Graham Robertson Electrical, based in Stirling. Graham decided to divest himself of the retail business in 2013, and that left me to take over from being the manager to being the owner. So we've been there ever since. We deal primarily in audiovisual products, so things like televisions, hi-fi, including smart speakers, cameras, headphones, sort of things that people tend to enjoy using rather than need.
And the big question, how has coronavirus affected the business for you? What changes have you had to implement? How have you dealt with staff? Has there been any downturn in business, and how's it affected you?
Well, the most obvious thing is it's forced us to close our doors, and we've been closed for 3 months. All of the team, other than myself, have been furloughed, and it's really only been over the last 2 to 3 weeks that I've started to bring any of the team back with a view to getting ready to trade again. However, our business just didn't completely evaporate. So we dropped initially to around about 25% of our normal turnover, but still with most of the costs there other than staff. So the furlough scheme has been an absolute godsend because it allowed us to protect the staff's earnings and it allowed the business to operate without most of its normal turnover. In terms of the staff themselves, we've kept in touch with them, sort of kind of weekly chat to see how everybody was. But purely on a social level, really, I've not burdened them with any of the business stuff. I wanted them not to be kind of spooked by anything that was happening. But they're all looking forward to coming back whenever that's possible.
Yeah. So have you had to make changes to your shop?
We need to obviously consider the social distancing aspect. We're quite lucky that our sales area, relative to the number of customers who typically come in, is quite large. So we're able to kind of split the shop up into zones, and if we don't have more than one customer group in a zone, we can keep everybody way more than 2 meters apart. And I prefer to err on the cautious side rather than the adventurous side when it comes to that. Particularly with the number of us that are in the business, if any of us start to come ill, then it's game over. We're closed again, which I really don't want.
No. And with the recent announcements, when do you think the shop will be open fully again?
Well, we are planning to open from 10 o'clock on Monday morning.
Right.
So we've been working quite hard the last 2 weeks just to put in these physical changes to keep people apart, invested in floor markings, masks, visors, gloves, hand sanitizers, anything we think that we realistically need to keep ourselves and our customers safe. And then the bulk of the stock that we need, that arrived in this morning. So we should be pretty much ready to go. Complication comes now that there's lots of stock sitting in the distribution chain that would ordinarily have been sold through by now. So like Sony is sitting on extra stock, other retailers are sitting on extra stock, and there's new products ready to launch. So we've got a combination of old and new products when we would probably normally only have the new by this point in the year.
Right.
But it means there's lots of bargains.
Excellent.
And what are your views on the action that the government's taken, especially here in Scotland, about the lockdown rules, but also the financial incentives?
If I start with the stuff that's more practical, so the financial side of it, the grants that were open to the business and the suspension of rates, without that, I think we would really have struggled. So we've been able to stay in a positive cash flow situation quite comfortably, which wouldn't have happened but for the grant. It wouldn't have happened if certainly wouldn't have happened if I was still liable for paying staff's wages when they weren't coming to work and we couldn't generate money. So I think that the decision to protect people's jobs was crucial. All my staff will have a job to come back to, as and when it's okay for them to do so.
Excellent.
On the practical side, I felt probably we locked down late. I think that we were told, and it's only an opinion piece, this one obviously, that we were told for quite a wee while that we were 3 to 4 weeks behind Italy in terms of the way that the virus was spreading in the UK, when in actual fact, I think, with the benefit of hindsight, you can see that we were really only 2 weeks behind Italy, and we locked down almost exactly 2 weeks after Italy locked down. So we didn't really learn from their experience, and perhaps we might have been out of lockdown a bit earlier if we'd acted a little bit quicker.
Yes. And did you find the process of claiming the grants and the assistance fairly straightforward?
These aren't things I typically relish. I'd much rather give these tasks to somebody else to do, but with everybody furloughed, it was left to me. So no, it was actually easier than I thought it might be.
Yes.
And paid quickly?
Yes.
Yeah.
The grant was paid within about a week, which I think was the timescale they'd given us. And the furlough money has come in time every single time so far. Fingers crossed it comes in for this month's wages.
Yes. And how do you think it's going to look going forward then, when you do open the shop?
I think there's a lot of pent-up demand on a practical level, and I know that some people have been adversely financially affected, horribly affected, and not being able to claim money. Their businesses are closed. People like hairdressers, for example, who haven't been able to trade and were maybe self-employed, they're probably in a horrible position. But I think the government schemes have covered an awful lot of people, and the average person has either been continuing to work remotely or has been furloughed. and haven't been able to spend the money. There are no holidays to go on, no sporting events to go to, no bars, restaurants, cinema, struggling to get out the shops because they aren't open to buy stuff. So a lot of that discretionary spend has been postponed, and I think that when we do reopen, and it won't be unique to us, people will want to buy things. They'll want to perhaps do home improvements instead of going on holiday.
Yes.
So through previous economic downturns, do you find that the business is affected, or is the expenditure that you see in the shop, is it fairly steady throughout cycles?
If we go back to the last economic downturn, I actually came into the business towards the back end of that, and the business had taken a dip in the 2 years, 2007, 8, 9, it had taken a dip, really recovered strongly in 2010. But there are other factors that tend to drive our business, such as sporting events, changes in the technology. So, in years where there's a World Cup, we tend to get a bounce. In years when there's an Olympics, which sadly been postponed, we tend to get a bounce. Or if some earth-shattering new technology comes to market in that year. So the year that high-definition tuners were first available on televisions and we had the digital switchover, that boosted business. When 4K screens first came to market, that boosted business.
What are the top sellers? Is it TVs, computers?
The vast majority of our business comes from television and audio, specifically Sonos smart audio systems are brilliant for us.
Yes, very popular. And finally, we do like to support local businesses. So is there any incentive that you could offer our clients to visit your store or website when lockdown fully eases in Scotland?
Well, most of our business tends not to come because we're cheaper than anybody else. It tends to come because we're no more expensive than the big retailers that people typically shop with. But the service is more individually tailored. So somebody who comes in who needs a lot of support, both before they buy or after they buy, they can get that support. So if somebody needs to guide them through why one TV is better suited to them or one hi-fi system is better suited to them, they can get that and make an informed purchase rather than the best guess. But we are looking over the next few months certainly to hook up with local businesses and offer the client base some sort of additional incentive. So what we're going to do for A.R.D clients is that we'll offer them an additional 5% off whatever our lowest promise price is. And we will look at every day John Lewis, Curry's and Richard Sounds, and we will routinely match the lowest of their prices. So we'll offer 5% off that price, and then for televisions we'll also offer 12 months free in-home support with the product. So if, having bought a TV, somebody needs some advice on how to activate new smart features or can't remember how to do something that they know the television does and they really want to explore, then somebody will come out to their home free of charge and give them a hand with that.
That is excellent. Thank you very much. We can speak highly of the service, having used it ourselves.
Yes, one of Dean's televisions is in Dawkins Tower.
It is, that's true. We also have them here in the office and they were installed and no issues at all. So excellent service. Thank you so much. And finally then, we'll move on. I'll just pause it for one moment, see what questions we have and if we can answer them now for you. Hi, so yes, a couple of questions in here. One for Dean. Have you seen any trends in certain sales during lockdown?
Not really. I wish I could give you some pearls of wisdom, but I've been working on my own pretty much for 12 weeks, and it's literally just been a coping thing for me, so I haven't had a chance yet to sit down and look. The one thing that does spring to mind is that people are shopping more online, and they're doing so because they've had no other option.
Yes.
So it means that businesses like mine will absolutely have to adapt, and we will have to strengthen our online presence. I've decided to invest in some additional telecoms infrastructure that will allow me to have staff who can answer customer queries remotely outside of our normal opening hours. It might be a month or two before I have that in place, but it's become apparent from the phone calls I've been taking that if you can answer the phone at 8 o'clock at night when somebody's browsing your website, you can pick up business that you might not have picked up if you'd had to wait on the customer visiting your store.
Yeah, so even with you opening your doors, you still expect the online sales to keep going up?
My expectation is that people who perhaps haven't been fully comfortable buying online before have had to embrace that technology and have no other option because it's been the only way that they could get what they wanted. The experience hasn't been a poor one for them, and they'll feel more comfortable making these purchases online going forwards. And we need to give them both options, or 3 options essentially. They can walk into the store, they can pick up the phone, or they can contact us online. And we need to be as flexible as we can with these.
Yeah, excellent. And then Andrew, do you have any update on the reopening of the property funds?
Yes, the property funds were suspended, as we covered in previous webinars, due to the fact that, or the main fact that the property couldn't be valued by surveyors because of the lockdown. With the lockdown easing in England in particular, then a lot of the surveyors and actuaries are back at work and getting these assets valued and getting them back on the books. But the property funds generally are UK-wide, so with the lockdown still in Scotland, Wales, Northern Ireland, we were still having difficulties, I think, with the valuations coming through. So at the moment, the funds remain suspended. The funds haven't collapsed. They're not worth nothing. But we have no idea yet when they will reopen. But one would like to think it's going to be within the next 2 or 3 months in any event. Meantime, we use alternate funds, and once the property fund does become fully actioned, then we'll let you know on that. It doesn't really affect us in a great deal because of the fact we only have a small proportion of assets within the UK commercial property sector anyway. But once we find out an answer to that, we will let you know. I've also got a question here from William. William Dean, he's very interested in the home assistance scheme that you're offering. Dean, he's actually based in Wellington in New Zealand, so just to see how you're going to travel to that one.
If he pays the flights, we'll go.
Oh, there we are. William, all your dreams come true there.
So thank you again for listening and all the suggestions. We've had a couple of options from clients of what they would like to hear from, and it's looking like the next webinar will be in July. As soon as we have a date for that, we will let you know. And we have lined up a special guest, Connor Bowie from FFM Solicitors.
How we afforded to get him? I get a solicitor. My word.
So he'll be here discussing the importance of having a will and power of attorney in place. Now, we've worked closely with FFM for some time now and offering our clients great service in preparing wills and power of attorneys. So anybody who has any questions about either of those, then please do think of them ahead of that one. Anything else you want to add, Andrew?
No, we hope you're enjoying the sunshine of yesterday and hope that the warm weather continues and that we get rid of this rain. But thank you very much for joining us. You've had an enjoyable time and look forward to questions for next time. And until then...
Hold that thought, Andrew, hold that thought. We have another question just in. Let me see. When will your office be open? Right. Well, we don't have an exact date for that yet. On the initial plans, it was looking like we will fall into phase 3. So we believe it could be sometime sort of end of July, August, but we do wait on official guidance for that one. So that's why we're looking into what we need to get in the meantime, the screens or sanitizing stations or whatever, trying to get everything well in advance of that. So when we do have a final date, then we're ready to go. But as it stands, there's nothing concrete just yet, but we hope it will be as soon as possible. Yes, we do, because the banter between the two of us is getting a bit tiring. sorry to say that, Richard. None taken, thank you. Lovely having Dean with us this morning, and thank you very much for coming in as well, Dean. It's appreciated. That's great. Thank you, everybody. Lovely.